So we got to talk about how I made $469,000 this year alone in my trading account in the stock market. We're going to go through how I do options, how I do stocks, how I do all this stuff in a low risk way. You can see right here my trading account has been absolutely blowing up. I went from $0 in 2018 to almost $1,000,000 right now. I might hit $1,000,000 by the end of the year, but there's some super important things that we have to go through, and I'm really making this video out of necessity because I probably talked to over like 100 people every single day between YouTube, X, and Discord of people saying just crazy stuff that they're doing in the stock market right now. But this is the key part of the video right here, and I went through the time to type all this stuff out for you guys, for everyone that gets this newsletter. So let's go through it and comb through really what it means. Everyone, and I mean everyone right now, is a genius in this bull market. The stock market has been pretty much going straight up, and you can see right here on my trading account, $974,000, but look here right here on the bottom, 92% year-to-date change. Is that typical? Absolutely not. I'm the first to tell you that I'm probably not going to make 92% every single year. So if we go down a little bit right here, am I showing you this to brag? Absolutely not. I'm just showing you how easy it is to make money right now in this bull market. Stocks like Palantir, Tesla, SoFi, all those stocks are pumping like crazy lately, and everyone in their portfolios, all these newbies on Robinhood, they're basically seeing green every single day, and they're getting confident that all the stock market does is go green. I'm not saying I'm bearish or anything. I'm just saying the market does not have to go green every single day. I have millions of dollars in the stock market going long the market, meaning I'm betting that it's going to go up. So just want to get that clear right there. I'm not a perma bear. I'm usually always bullish actually, but I just want to let you know that I feel like the stock market has been going green quite a bit lately, and it could definitely go down, so don't get carried away with that. So everyone's talking about how exciting it is to make money right now. I totally get that. I love seeing green in my portfolio. I mean, I made $468,000 a year to date. We're absolutely printing money in here right now. That's okay. But here's the deal. People are DMing me today freaking out because they're saying, NVIDIA, it's crashing right now. And I'm like, dude, it went down 2.5%. That's nothing. Look at the year to date right here. NVIDIA's up 178% year to date. The stock started out the year at $48 per share. It's $134 right now. So when you're sitting there freaking out because you bought right here on the top for maybe $145 and now you're at $134, you're down $10 a share. Just look at the big move that the stock made. That is the problem with most people. You guys all buy in at the top, you panic, when it goes down a little bit, you sell out, and then maybe the stock is going to rebound and it goes back up over here. But people need to understand that the stock market going down 2.5%, that is not a crash. That is not even a dip. That is just a little tiny blip on the chart. So this is why I said right here that most people have no clue how the stock market works, and all they think that could happen is the stock market is going to go straight up, and that is so far from the truth. Yeah, in the long run, I get it that like the indexes usually go up in the long run, but short term, it's going to be bumpy, especially when we just ran up so much and valuation levels are a little bit extended right now. So like I said before, the hot stocks like Palantir, SoFi, Tesla, HIMS, those are the stocks that have been going pretty much straight up. Those are like the hype train stocks that all the Robinhooders want to get on. They're buying calls, they're going crazy on them, and a lot of people, I can't tell you how many DMs that I get every single day. People telling me, I got wiped out. I'm so sick of losing money in the stock market. They're making all these plays where they maybe win on like 5 trades, but then on a 6th trade, it wipes out all the money that they made on the first 5 trades. So I'm like, dude, there is a better strategy. So we're going to go through that in just a second, and that's how I scaled my portfolio so fast. Works in bear markets, works in bull markets. It's pretty much an all-weather portfolio right there how I do it. But another thing that really makes me mad is all the cool accounts and all the big accounts on X that post like news about the stock market. Just keep in mind, they're posting news. They're not adding any value. Yeah, Broadcom reported earnings, the stock went up. What does that do for you? The stock already made the move. Yeah, Palantir just got added to the NASDAQ. What value does that have? That doesn't do anything for you because a move is already going to be made by the time that you can make a move on that trade right there. So I like to worry about things before they happen. I like to look forward. I don't like to look backwards and just be a news reporter. Like everyone goes online to look at the news and get all excited about things, but it's like, how are you going to use that news to make money? Are you going to go chase Broadcom after it just went up 25%? Maybe you could, and maybe you'll make some money, but it's now 25% more expensive. So when you look at all those accounts online hyping things up, that makes people just want to go buy into something, and they're only buying into it just because it's going higher. And that right there is gambling, and that is speculating. And guess what happens to gamblers? they lose money. Vegas was not built on winners. The stock market is not built on winners. You are probably going to lose money in the stock market if you keep trying to do these crazy trades. So let's break this down one more step, and then we're going to go into my strategy. So let's just pretend that we're going to buy a landscaping company, okay? So we're just going to say we're going to go out there, buy a landscaping company, simple business. What is the number one thing that you're going to care about before you buy the landscaping company? Of course you care about the price, but are you going to care about the Fibonacci retracement, the VWAP, the SMA, the Bollinger Band, the RSI, the momentum? No. You're going to care about how much money the company actually makes and how much money they're expected to make going forward. How are their future growth prospects? Do they have a moat? Do they have pricing power? How bad is the competition? Is the competition going to wipe you out going into the future? How does a company actually look from a financial basis? Isn't that what we're doing? We're trying to buy stocks and then the price goes up. But looking at a VWAP or an SMA or a Bollinger Band, does it have a little bit of value? Yeah, of course. But you're not going to go look onto a business that you're going to buy like a landscaping company and say, what is your Fibonacci retracement? You're going to sound crazy. But when you buy stocks, it's the same exact thing. Like look right here. Every share equals ownership in the company. So if you're buying a share, just pretend you're buying the entire company, but you're just buying a little sliver of it. So do you care about how much money the company actually makes and how their growth prospects look going forward? Most people don't. I care so much about that stuff because that's what the name of the game is. You want to buy a company that's profitable right now. They're expected to make more profits going forward. They have a moat, pricing power, competition is low, and you want to be able to buy it for a good price. Like if you buy a landscaping company for $1 million, and what if they profit $200K a year? It's going to take you 5 years to get your initial investment back. That doesn't sound too bad. But what if you buy that landscaping company for $1 million and they make $1,000 a year in profit? The growth prospects look like crap. There's a lot of competition. You might even go out of business in the future. Do you want to buy that company for $1 million? Absolutely not. But just because the other landscaping companies are going up in price, that doesn't mean that yours should just go up just because those are going up too. So that's what I'm talking about with all these like meme-ish stocks that are going up right now, but it's disconnected from the fundamentals. So you really got to understand what you're buying at what valuation level. Don't just buy into something because the price is going up. You really got to understand what's going on. So right here where I say, what should I do? This is where we're going to go into my strategy. But I just want to hit on this super quick. So why do most people lose money? Because they look at stocks on a short-term basis. They don't give these companies time to grow. If you buy a stock, or let's just say you buy that landscaping company, if you buy it for $1 million today, is the value of that landscaping company really going to be any different maybe like a week or a month from right now? Probably not. But what about a year from right now? That's going to give us a year to get new contracts, make the business more efficient, try to grow revenue, expand a little bit. Yes, the company has a very good chance of being bigger 1 year from right now. So when I do options, I typically do longer duration options because they're safer. But the reason why people don't like my strategy is because it's boring. But for whatever reason, I have millions of dollars and most people don't. So maybe you should look at that right there and say, well, the boring strategy is a safer strategy and it's easier and it's way more profitable. So maybe I should look into doing that. That is what I do. So they don't give these companies time to grow. They don't understand how much money the companies make. They don't get the valuation level. They don't understand the fundamentals. They don't read the balance sheet. They don't read the cash flow statement. They don't read the earnings. They don't even know how much money they make if they even make any money. They only want to buy for one reason and one reason only. The stock price is going up, and that is the dumbest thing on planet Earth. But guess what? Human nature doesn't change. Humans are always going to buy into the hype. They're always going to sell on the fear. That's how the stock market works. And guess what? That's why I make money. Warren Buffett's most famous quote, I'm greedy when other people are fearful, and I'm fearful when other people are greedy. So right now, people are greedy in my opinion. So right now, I'm laying low, but guess what? I'm still making a crap ton of money. Look at my year to date. I'm up 92%. And guess what? 92% my year to date. I'm not even really making a crazy amount of trades right now because I feel like the market is a little bit overvalued right now. But imagine if the market was undervalued and we took a dip. Maybe next year the market's going to fall 20% and this portfolio will go from $1 million to maybe 800K. So yeah, it's going to go down to this level right here. But guess what? I am adding my positions through this whole time frame right here when I take that dip. So when the next bull market comes, I'm going to go Pluto right here. Look right here. Check down here on the value of my account every single year. So from 2021 to 2022, this is December, so the end of the year, you don't see much of a change right there. But guess what happened in the stock market? Check out what Triple Q did in that same time frame right there. So if we go to a 5-year chart, look at Triple Q went from 403 all the way down to 268. So the stock market did take a dip right there. But guess what? This is when I still had a day job and I was picking up overtime like crazy, plowing money into the stock market because I wanted to buy a bunch of call options. I wanted to sell a bunch of put options. And guess what? When that market was taking a dip, I was adding in this whole period right here because I knew that this was because Jerome Powell was raising interest rates right here, so the market went down. And you guys know that interest rates are like gravity on the stock market. So if rates go up, the market valuation should go down. Totally logical. That makes sense. But I knew that inflation wasn't going to be around forever and it would eventually cool down. And at that point, once Jerome Powell started to signal that we were going to cut rates, the market went up. I mean, the market went up before that actually happened, but I knew that this dip was overblown, so I made a bunch of long positions. And guess what? I capitalized. I got a lot of good entries down here on the bottom. So because I was buying a dip and I was preparing in 2022 for the next bull market, look at how much money I made in 2 years, from 290 to almost $1 million. That is what happens when you do this stuff the right way. So let's dive into my plan. You made it all the way towards the end of the video. So this is my exact plan. I'm always buying shares of Triple Q and VOO plus individual companies that I feel like are trading below intrinsic value. But the base of my portfolio, VOO, Triple Q. Okay, we understand that. So now what happens is if I feel like a stock is trading below intrinsic value, I will then go sell puts on that stock. So when I sell puts, I will get that premium credited to my account immediately. Now people are going to say, well, when you sell puts, do you do that cash secured or how do you do that? And what I do is I secure the puts with my other shares. So the base of this Charles Schwab portfolio is like $600,000 or $700,000 in VOO and Triple Q. So instead of having cash in my account, I have all my money invested in shares. Now, the typical person's going to say, well, dude, isn't that risky? Like, what if the market goes down and what if you're forced to take assignment of all these shares? So that's a really good question. And I actually just sold a put on NVIDIA the other day and I collected $28,000 in option premium. So that was a really good play right there. I feel like right now NVIDIA is trading somewhere around intrinsic value. So I sold a put on NVIDIA. The put was secured by the base of my portfolio. So if the base of my portfolio happens to go up maybe 10%, that is 10% more than I'm making versus having that secured by cash. The cash is going to do nothing. It's actually going to go down in value because of inflation. But the base of my portfolio, let's just say 10% per year. But that trade right there on NVIDIA, $28,000, I am basically getting a free loan on the base of my portfolio. So I'm not actively on margin right now. I'm just using the base of my portfolio as collateral to be able to sell the puts on NVIDIA. Now, the typical person that watches this video is going to say, dude, you're selling puts. They're not covered. If you get assigned or the market takes a dip, you're going to get totally wiped out. And I'm going to say wrong because I, number one, have margin buying power to take assignment of all the contracts that I sell, number one. Number two, I have other money in other places that if I don't want to take assignment on margin, I can then take that money, send it to my Schwab account, take assignment for cash, and I never touch margin. But you have to understand that I'm only going to sell puts on things that I am okay to hold for the long run. That is my number one rule. I have to be okay to hold it for the long run. It has to be trading below intrinsic value, and I have to want to own it at the strike price. If I feel like it's trading below intrinsic value right now, because that's why I made the trade, why would I not want to buy it a year from now for a lower price and get paid $28,000 to do it? It's a no-brainer for me, but I'm very picky and I'm very choosy with what companies or ETFs I do this on. I don't just shoot out trades to shoot out trades. I do trades that I have a high margin of safety on. I've read every page of their earnings statement. I understand the business. I understand the future prospects. Of course, nothing is guaranteed, but I feel like when I make these trades, I have a very high margin of safety, and that reflects in my portfolio value. That's how I went from $0 to just about $1 million in the Schwab trading account. I have other accounts too where I have another $1 million in other places, but just my Schwab account alone, 0 to $1 million in roughly 5 to 6 years. Doing this is safe, but guess what? Risk is relative. If I go get in a fight with a pro boxer, that's risky for me. That's not risky for him. He's prepared, he trained, he studied. That's what I do with this stuff right here. But people that look from the outside looking in on my strategy, some people are going to say that that's risky. But I promise you, if you go do your spreads or you secure with cash, that is way more risky than what I'm doing right now, because if you do a spread, you're doing it for two reasons. You're doing a spread because you don't have the buying power to do the full trade, so you maybe shouldn't even be doing the trade from the first place. And also, if you're doing a spread, maybe you want to hedge your downside. But if you want to hedge your downside, you probably shouldn't be making a trade anyways, because you might be forcing something that's not really there. Do you see Warren Buffett going out and hedging any of his plays? When he makes a trade, he has ultra high confidence in the trade. So it's like, why would I want to hedge against selling my puts on Nvidia? Like, if it goes down to the strike price, I want the shares. Like, if I feel like it's trading below intrinsic value right now, which is why I made the play, of course I'd want to buy it if it goes cheaper. So I said right here, I do not ever break my rules. Sometimes there is definitely less opportunity in the market. Like right now, I feel like things are a little bit expensive, so it is harder to find deals, which means I'm doing less option selling, but that's fine. I'm still averaging like 30K a month, and I made over 90% year to date, so it's gonna be fine. If the market takes a dip, I have a lot of buying power ready to go when that dip happens. So short term, the market's like a voting machine. Long term, the market is like a scale. So the stock market short term is based on fear and greed. Long term, the companies get put on a scale and they are weighed. And whatever they weigh in at, that is what the true intrinsic value of the stock price could be. And this right here is when things will either correct lower or they will correct higher. So if things are overvalued, whenever the market decides to put it on a scale and say, what is the true intrinsic value? That is when it will correct lower. That's when we get dips in the market. So right now, yeah, things are easy. It's not always going to be easy like that. And just so you guys know, I'm not bearish. I'm ultra bullish on America in the long run, but the valuations right now are a little bit lofty, and that's why I'm being cautious right now. Maybe I'm wrong to be cautious, but guess what? I made over 90% this year. So I definitely have a lot of exposure to the market, but I do have over $1 million in margin buying power. I'm not saying I'm going to use it. Like, I've only used margin a couple times in my life, and it's only for ultra high confidence plays. So keep that in mind. I'm not just going to go use margin to use margin. I get it that margin is risky, and most people should never use it, to be honest with you. And keep in mind, some years I might be down 30% or more. I mean, the stock market's like a roller coaster, so it goes up, down, up, down, up, down. But in the long run, looking from A to B, if you look on like a 5-year period, a 10-year period, whatever period you want to look at, my portfolio is most likely, no guarantees, it's most likely going to continue to trend higher. So short-term movements don't matter. Even 1 to 2 year movements, it's irrelevant. The stock market goes down, the stock market goes up, long run it'll trend up. If you can't stomach that volatility, you got to go into another business. Like I said earlier, the person that was freaking out because Nvidia went down 2% today, you need to sell all your stocks, go buy a bond, go buy real estate, go do something else, because you're not in the right game right now. You don't have the emotional intelligence to be able to look at your portfolio swing up and down. So I'm an investor, and I like to use options to magnify my returns on high confidence plays. When I sell options, I roll that into the base of my portfolio. It's just a rinse and repeat cycle, but I only sell options, like I just said, high confidence plays, high margin of safety, super conservative. And the key takeaway from the whole video, educate yourself, know what you're buying, at what valuation level, do your own research, and keep refining your skills. If you don't know what to look for, how are you ever going to find it? You got to know what you don't know. You got to start studying this stuff on a serious level if you really want to be able to break free from your 9-to-5 job and do the stuff the right way, learn how to generate a bunch of money in your portfolio with options, but do it in a conservative way where you're going to make money in a bull market, you're going to make money in a bear market, and you're going to do okay in the long run. So if you want to watch a video where I go into more detail about how I do stock options, watch this video right here, but also check out all my links below for my course, for my intrinsic value calculator, and for my free alpha report that we just went through right there. I send it out every day the market's open. I'll see you guys later.